Hello, everybody. Welcome to the latest in our series of webinars. Thank you all for being here with us here at Advancing American Freedom. As always, we appreciate your support, and we definitely appreciate you taking the time out of your afternoon to spend a little bit of it with us. We have a very good call today lined up here. We want to talk about what's going on Capitol Hill as we speak. If you're following the news, you know that the House of Representatives is working on what everybody likes to call the One Big Beautiful Bill, which contains a lot of different tax provisions in it. Here at Advancing American Freedom, as our supporters, you know that we were very supportive of extending and making permanent the Bush the Trump Pence tax cuts from 2017, the TCJA. We worked on that in 2022 when we launched a blueprint for economic growth here at Advancing American Freedom. We worked on that in 2024 when we were in states like Ohio, Pennsylvania, and Wisconsin and other states where we ran our grassroots campaigns in favor of extending and making permanent the tax cuts. So we are hoping that this is the moment that we can actually accomplish that. But before we can accomplish that, there's a lot of sausage making that we need to deal with. So I wanted to bring on two of our smartest leaders in this area. Andy Koenig is one of our policy advisors here at AAF. Andy was in the White House in 2017 while we passed this legislation. So he was on the ground floor helping to build that bill. Also a critical part of our policy shop here, joined us late last year from the Heritage Foundation. During the Tax Cuts and Jobs Act, he was working at ALEC, the American Legislative Exchange Council, and leading their effort on this bill as well. So he's neck deep in this thing as well. So I wanted to start it off here just by turning first over to Andy. Andy, talk just for a minute about budget reconciliation. I mean, everybody's been talking about this process, but it's a hard process to really understand. Talk about budget reconciliation, what it is, how does it relate to the effort to extend these tax cuts, and then what did we see happen this week so far on the Hill?
Sure. Thanks for having me, Tim, and thanks everybody for listening. So yeah, budget reconciliation is a process that has been used to pass all of the real major legislative vehicles in Congress, whether Republicans or Democrats have been doing it, Tim, over probably about the past decade. So if you look at the 2017 tax cuts that we passed, if you look at Obamacare, if you look at the Inflation Reduction Act under Biden that created a lot of these green energy tax credits. All this has to get done under reconciliation. And the reason is simple in that in the Senate, there is generally a 60 vote threshold required to end debate and move on to a bill. To actually consider a bill, there needs to be 60 votes in the Senate. So it's not really a simple majority. So while we have 53 senators, we can't reach that 60 vote threshold in an era that is really, really partisan, especially when you're talking about extending major tax cuts that President Bush passed and supports. So, in order to pass this bill with 50 votes, there's a process known as budget reconciliation, which allows legislation to be fast tracked through Congress and especially through the Senate. It just has to meet a bunch of different rules that are put in place statutorily. The most important of these is that it has to impact the budget. It can't just be some sort of legislation on a policy that doesn't have to do with spending or with taxes directly. It has to be a direct impact on the budget. It can't just be incidental. So there are a number of different tests to make sure that we get there. But the main thing that we like, that we see from budget reconciliation that's important to know is it has to be spending, it has to be cuts, it has to be taxes, and that's the only way we can pass this stuff with 50 votes.
Yeah, that's right. So this is the one shot we get at it this year, and the stakes are pretty high. Joel, let's talk about the contents of this bill. Good, bad, ugly. Kind of give us a run through on what you're seeing right now as it stands in the House.
Sure. Well, the good is the very obvious one, and that is that this package does prevent tax increases for individuals. If this is not passed the way the current law is written, after the end of this year, tax rates are going to go up across the board for individuals. And I think the one very good thing about this legislation is that it does extend, make permanent the Trump-Pence individual income tax cuts. I think that's something we should all applaud. Without that, we would see fewer jobs. We would see, of course, family incomes decline by around $1,500 on average per year, even more if you're making more, and it would result in slower economic growth if this doesn't pass. Some of the things that I'm concerned with, though, are directly related to primarily the so-called Inflation Reduction Act that was passed under Joe Biden. Of course, the Inflation Reduction Act was really the foundation for the Green New Deal. Think of all the subsidies for solar panels, wind turbine, biofuels, electric vehicles. This is trillions of dollars worth. Now, on the plus, this tax package does repeal immediately some of those Green New Deal elements, particularly electric vehicles. However, it leaves a number of those Green New Deal programs in place permanently, and for the bulk of them, does not even begin to phase out until several years from now, when we might no longer have a Republican Congress or a Republican president. So that is deeply troubling, because even though we're taking credit in this package for the supposed savings in future years from rolling back the Green New Deal, the truth is those changes don't come into place for several years, and a future Congress can, especially if it's led by Democrats, can easily undo the phase outs.
Yeah, absolutely. Let's dig into that a little bit more. Andy, as we've been watching the coverage of this, the idea is that there would be a vote on this in the House potentially next week. But as you see in the coverage, there are a lot of different factions of the Republican House that have significant issues with portions of the bill. As Joel just mentioned, not repealing the entirety of the IRA is something that's pretty controversial amongst conservatives. But there are other provisions in there that are sticking points, whether it's the SALT deduction or potential SALT deduction in New York and other Democrat states, or whether it's spending cuts for Medicaid. Kind of talk through these different hot button issues, and kind of maybe if I could ask you to sort of handicap it, and how do you think this plays out next week?
Yeah, Glenn, let's start by saying this isn't easy to do, right? Like, these margins are really, really tight. When we did this in 2017, first, as you'll remember, our first attempt at a reconciliation bill was to the repeal and replace of Obamacare, which famously failed. And then I think it was really only after that, when we knew we had to get very serious about tax reform, that we were able to get this done in November of 2017. So this took almost the entire year to pass this originally. And, we had 20 votes to spare in the House. Right now, the House can only lose 3 votes because of the historically tight margins. So I do think that it is, there are going to be compromises made. And I think that we have to understand that there's going to be things in here that aren't perfect. There's going to be stuff in here that we don't like. But to Joel's point, right, if we do nothing, you're going to be faced with a $5 trillion tax increase. That's not just the taxes on individuals. It's getting rid of the 20% small business deduction, the pass-through rate. It's, it's a doubling, or, I should say cutting in half of the death tax exemption. So death taxes go up by hundreds of billions of dollars. So a lot of policies that we really need to focus on the positives here. But yeah, then there's some more controversial stuff. So I would say that what happened is, because there is the idea of doing one big, beautiful bill that includes not just extending and making permanent tax cuts that are already in place, but doing energy, but doing the border, addressing spending on entitlements, especially in Medicaid, and then thinking about trying to adjust some of the bad Obama and Biden policies that were in the Affordable Care Act, or that were in the Inflation Reduction Act. So there's a lot of different priorities at play. I think the biggest sticking points are the state and local tax deductions, where folks in Republicans in blue states would like to see an increase in the amount of money from state and local taxes that can be deducted. That's a fight that I think conservatives have been okay with, and advocated for cutting that number and not trying to subsidize blue states for having higher taxes. That's an issue that hasn't been resolved yet. There's questions about the Medicaid cuts. Moderates think that they're too much. Conservatives think that they're not big enough. They've put into place work requirements and eligibility cuts, but people want to see real structural changes to an entitlement program that is going to be unsustainable. And to some people, there's not a satisfactory amount of those in this bill, as Joel alluded to. Some of the tax credits that are in place that we weren't able to cut because of the tight margins are upsetting folks. So there are still some issues out there. The budget committee has to take all these bills and put them together. Then it would move to the House floor. It's my sincere hope that this bill and this legislative package is able to move, because I just think the good of extending, and I'm obviously biased as someone who worked on the original tax cuts, but the good of extending those, is worth some of these other trade-offs and concessions. And this is still ultimately a $4 trillion tax increase that also, or tax cut, let me be very clear, $4 trillion tax cut that also includes spending cuts. So I hope they can come together next week. But yeah, I think you have conservative factions, you have moderate factions, you have blue state factions that still need to come to an agreement. So it's certainly up in the air.
Yeah, absolutely. And then even if you do get it through the House next week, then you're going over to the Senate, and there's a kind of populist faction in the Senate that has said, no way, no how, we are not touching any spending cuts in the Medicaid stuff. And that's just to be a real problem, because the conservatives in the House who are fighting for Medicaid spending cuts have made it pretty clear that if that's not part of the overall package, they're not going to get their support. So got to work through all of that kind of stuff. But to Andy's point, Joel, about on balance needing to pass this, I wonder if you could think through, help people think through what would be the economic impact of failing to make the tax cuts permanent. If you had this $4 trillion hike, at a time where we're also having a lot of economic uncertainty because of the tariff issue, which everyone on this call knows where we stand on that. I mean, what would happen? What would happen to the economy?
Yeah, well, first off, because rates on wealth creators, entrepreneurs would be increasing dramatically, we would see millions of small business owners harmed. That's because the vast majority of smaller business owners aren't even incorporated. They're passing through their income onto the individual side, and they would see their income shrink. But second of all, a number of the most important items of the Trump Pence tax cuts relating to being able to immediately and fully expense capital investments, immediately being able to expense research and development, those provisions would be falling by the wayside next year. And that would deter investment into the economy. That would have long-term negative ramifications for growth. So I think those are the two biggest elements. I would caution us from being too optimistic about the growth boost that passing this will involve. And that's because when this first round was passed back in 2017, there were very substantive changes to the then existing laws. We dramatically lowered the corporate income tax rate along with individual tax rates. The most positive aspects of this package are simply extending and making permanent some of those changes. That's already baked into the growth. One of the downsides to the current proposal is that it's been laden up with so many tax carve-outs and non-growth inducing elements that it's weighing down on the growth impacts of the legislation. So it's certainly true. Passing this will avoid an economic pullback, will avoid the jobs losses, but don't expect the same type of a boost that we achieved following Trump Pence tax cuts, simply because the best elements of this are simply continuing those very positive changes.
Yeah, I think that's a great point. And as our supporters on this call, and by the way, folks who are on the call, if you do want to ask a question, please don't hesitate to press the Q&A tab at the bottom and drop your questions in there. But I think that's just a critical point, Joel. I mean, this is what we are trying to do at Advancing American Freedom, is we are trying to promote economic policies that create a stable environment for our job creators to go out there and do what they do best. That's why we're pushing back on the tariffs, right? That is this on again, off again tariff strategy, as we've heard from so many of you around the country, it is absolutely crippling to businesses' ability to plan for the next few weeks, let alone the next few quarters. So we want to push policies that create stability. Making these tax cuts, the TCJA permanent, creates that stability. So to Joel's point, it's not going to be a massive economic boom, but this economy is strong enough, and our job creators and our businesses are entrepreneurial enough that if given the chance, they're gonna go to great places, and we need to do that for them. I mentioned earlier the populist element in the Senate, and their position on the Medicaid tax or on the Medicaid cuts and a few other things. we've had this potential of they're calling it the millionaire tax hike be sort of floated from the administration a couple times now, and it looks like it's dead in the House, and that's a wonderful thing. But I do wonder if there's a possibility, as this sausage continues to be made, that could this thing be resurrected? Could either of you see a scenario where somehow this idea that won't die, that really needs to die, of raising rates on top earners, could that get back into this thing? What do you think, Andy?
Well, so yeah, not to go too much into the details on the numbers, but this the concurrent budget resolution that set up this current reconciliation package was different from like any of the other ones that we passed, in that the House and the Senate had very different instructions on what the Finance and Ways and Means committees were supposed to write, what kind of targets they were going to mark to, because we believe that the Senate is going to use a policy baseline known as a current law policy baseline. And without getting into really the technicals of what that means, they're going to assume when they start looking at these tax cuts that they just continue in perpetuity, as opposed to what is in current law, the expiration here at the end of the year. And that essentially means they don't have to pay for these tax cuts the same way that the House is required to in their budget. So the House has to make these cuts. The House has to consider these revenue increasers, like the president was pushing on the top end marginal tax rate going up. So I don't think the Senate will feel the pressure on the one hand in a positive to increase taxes the same way the House wanted to. In the negative, though, as we've said, they won't feel the pressure to cut spending either. They're going to be able to extend these taxes and then have an about additional $1.5 trillion to what I think they're going to do is essentially take some of these, economically inefficient tax carve-outs that Joel referred to and throw them in the bill in order to try to pay off different constituencies. Pass that bill, which ultimately I think could have a net tax cut in it somewhere around $6 trillion, and hand it back to the House. Senate flies away and says, you got to pass what we want, take it or leave it. So I actually think the way that this is set up is it helps us to fight against those negative policies like a higher income tax rate, but it also takes away some of the incentive for folks to cut spending when they get over to the Senate.
Yeah, that's right. Question here from one of our supporters. So if the final agreement seems to be really elusive at the end of the day, wouldn't it be advisable to just seek permanent extension of the 2017 tax cuts? That's the question. So the question is, like, why can't we just make this thing smaller and much more targeted? Joel.
That's a great question. That's actually what I would prefer to see. Let's make the individual income tax permanent. And just as importantly, let's make the business expensing for research and development and expensing for interest costs for businesses, let's make that permanent as well. As to why they're not doing this, well, that comes down to politics. Number one, the big sticking point on how much extra subsidies to give blue states through the state and local tax deduction. We see a literal handful of Republican House members that are threatening to vote against the entirety of the bill if the remainder of the caucus does not support more than tripling the subsidy currently given to the blue states. So that's one sticking point. Second of all, something that's not been talked about enough is that we have a number of green energy lobbying interests that have not just the ears of Democrats, they have the ears of Republicans as well. And that is a big part of the reason why you haven't seen this package simply on day one eradicate the rest of the Green New Deal subsidies. On these lobbyists, they're banking. And these companies are banking on the fact that a future Congress is simply going to undo the phase out. If you look at the stock market over the past week, solar, wind, nuclear are skyrocketing in price. And that's because these phase outs of the Green New Deal don't even start until the next president might be sworn into office.
Andy, you wanted to say something.
Yeah, and just a couple other thoughts. I think Joel makes really good points. Another couple of reasons that we can't just extend this, Tim, to be quite honest with you, when we passed this in 2017, the Republican Party back then was okay with allowing people to keep the money that they worked through the sweat of their brow without having to pay for it. We thought that a tax cut in and of itself was a good thing, right? So when we passed these in 2017, we increased the deficit by $1.5 trillion, right? and everyone was on board because that wasn't a deficit increase to us. That was allowing people to keep more of their money. We had a spending problem, not a revenue problem. I think today a lot of people want to make sure that this vehicle not only cuts taxes, but also addresses spending because extending the current rates is $2.1 trillion deficit reduction, right? Extending the doubling of the standard deduction is a $1.3 trillion debt or revenue reduction. So these things have costs associated with them, and people want to pay for them now. So that's just a different paradigm, right? Where we have people wanting to make sure that this is attached to big spending cuts. I'm all for cutting spending. I'll do it anytime, anywhere. So I'm fine with that, but it just makes it more complicated, especially when you have a margin where before I think we had 20, we had a margin of 20 Republicans. Now it's down to 3. The other thing I'll just say, just thinking about how this all comes together. Look, we've seen it before. I've been more bullish on this than I think other people have, Tim. And I think we've seen what the tactic has been in the House. At some point, it's put a bill on the floor, the president supports it, and have him rally the troops. Effectively becomes the whip of the House, right? Where it's his job to go get the votes. And I think at the end of the day, especially when it comes to conservatives, that's still the strategy. I guess the final thing I'll say on this, another reason it's complicated too is because a straight extension wouldn't include the priorities that the president talked about on the campaign trail, right? It wouldn't include no tax on tips, no tax on overtime. It wouldn't include a deduction for auto interest loans to help offset the auto tariffs. So they have to add in spending cuts. They have to add in these carve-outs that Joel's talked about. They have to add in the president's priorities. So yeah, it's not as clean as just a straight extension. These are just the politics of having such tight margins.
Yeah, I mean, Andy, I think it's such an important point. This idea of paying for tax cuts. Now, it's a little complicated, but I think our supporters understand this. As a matter of principle, we don't think that you pay for tax cuts the way that you pay for spending cuts because it's the people's money to start with. Now we do live in a political reality where we have a massive, multi-trillions of dollars in debt. And our deficit needs to be figured out. And so talk to folks about how you all think about weighing these two competing priorities. One, make sure that people don't have taxes raised on them. But two, what are we going to do about spending and where do we turn? So I think we all three agree on this call that we'd love to see the tax cuts just made permanent. And we'd like to fight on the spending issue and find a place to do it. But talk about where you would go. What would you do if you're a member of Congress and you're saying, you know what, I'm going to vote for this thing, but here's how I'm going to go tackle the debt problem?
I'll go real quick and then I'll let Joel respond. I just think historically budget reconciliation has been used just is not based on its rules, but just in practice. It's been used to cut spending or cut taxes and increase spending. If you look at Obamacare, IRA, or what we've been able to do. It has not been an effective tool for cutting spending. Where we've been effective at cutting spending as conservatives is fighting on things like the debt limit or on appropriations bills. And so I think that we've had a better opportunity, whether it was the Budget Control Act or the Fiscal Responsibility Act or some of the stuff that we've been able to do on individual budget or appropriations cuts when frankly, taken these arguments to the brink. Now, this is harder to do. And I think that it's difficult for Republicans to look at an opportunity like reconciliation, Tim, and not want to take a bite of the apple to do work requirements, to do eligibility requirements, to make sure illegal immigrants aren't getting entitlement programs, right? So I'm not saying this isn't the time or the place. I'm just saying historically, I think it's better for us to fight on spending when we're talking about things that are directly attributable to spending, like the debt limit, like appropriations. That being said, they're tossing a debt limit into this bill, so that takes that off the table too.
Well, yeah, I mean, I was going to make that point, and I think Joel can expand on this. I think part of the problem here is we don't have buy-in at the very, very top. I mean, the president isn't. The president himself wanted the debt limit taken off the table for his entire presidency. Right. Did not want to have to deal with that. He wanted that done before he even came into office. And so we have a real issue there in terms of how serious is our commitment at the very top to the spending cuts. And of course, there's been multiple promises not to even touch or look at or even say the word entitlements. So we do have a problem there. Joel, go ahead if you want to expand on that.
Yeah, I think it's important to remember that not all tax cuts are equal. We know from extensive economic research that if you lower taxes on investment, on capital gains, and on earned income, that has a real world economic impact. In fact, sometimes the economic growth can exceed the so-called cost of the tax cut itself. And that's why I think many conservatives would be fully on board with just renewing the Trump Pence tax cuts. The problem is this bill is so laden with extending the Inflation Reduction Act, tax gimmickry. For instance, we know that exempting overtime from taxation, tips and taxation, that's not going to induce economic growth, nor will subsidizing people's vehicle purchases, and certainly subsidizing California, New York, Illinois, their government operations, that does not induce growth. But yet we're going to be borrowing trillions of dollars in order to deliver those three non-growth producing elements. It's because of that. If you look at the growth estimates from this package, the Tax Foundation's most recent estimate is that this will result in a 0.6% long run economic gain. Now that's still an economic win, but that number would be far higher if conservatives would focus on the pro-growth element. So I'm certainly not saying if I were in Congress that I wouldn't support this. It's just that this could be much more favorable to growth if we eliminated the extraneous subsidies and carve-outs.
Yeah, yeah, absolutely. All right. Well, let's do an exit question here before we close out. I'll put you guys on the spot. Exit question: does this thing get done before Christmas holidays? Andy Koenig, what do you think and why?
Yeah, look, I think it does. Look, I'm in favor of this bill. I understand the sausage making and the other priorities that have to get put into it in order to pass this bill. But when we did tax reform, we passed the basis of this bill in 2017. Within 24 months, the private economy added 5 million jobs. Median household income went from $72,000 to $78,000. That's inflation adjusted. That's the highest level it's ever been. We saw an immediate economic boom. We saw people getting bonuses from work. Now, I know, to Joel's point, there was a lot of corporate tax reductions that were in there that this bill doesn't have. But this individual side is huge. It's huge for families. It needs to get done. The core of this bill is very, very solid. It is the president's priority. And essentially, you have an asymmetrical return profile. If this does get done, yeah, we might not have the world's biggest boom from it because it doesn't include those corporate tax benefits. But if it doesn't get done, on top of what's being done with tariffs, we could be pushing ourselves into a unilateral recession, Tim. So I think it has to get done. I think it will get done, and I'm all for it.
Okay, so Andy's a yes. What do you say, Joel?
I love a good, robust argument. I'm with Andy on this. I do believe that it gets passed, and I'm just hopeful that later on this year, we'll see conservatives make some real wins when it comes to getting our long-term spending in control. Just one point on that. We're going to be adding 20 trillion to the deficit over the next 10 years. At this point, every percentage point interest rate rise is another $300 billion worth of interest expense. So we have to get this under control.
Amazing, amazing. Yeah, well, I'll make it unanimous. I think it gets done too, but I think it's going to be really painful. And I think we're probably likely to see some massive internal fighting with some of our friends in the Republican Party over the next few weeks and months. And you know what? That's how this works. That's all right. But it'll get done because it is far too important not to be done. And it's just be complete political malpractice to allow for the Republican Party to allow taxes to go up on the American people. That's not what we do. That's not what we believe in. So, and for our part at AF, we'll keep working hard to make sure that it gets done. Next week, we will be unveiling a new set of advertisements that we put together on this particular issue that we're going to be releasing in key states across the country to encourage people to contact their members of Congress and just get this thing across the finish line, get it as good as it can be, but then get it across the finish line so we don't raise taxes on people. Look forward to unveiling that and talking to you about other things that we're working on. We will be in Raleigh-Durham area in North Carolina on Monday. So if you happen to be on the East Coast around Raleigh, we'd love to see you. We will be there with the Vice President and business leaders from the North Carolina area talking about the impact on their businesses of the tariff policies that have been put in place and the threat that exists if we don't pass this bill And then look forward to being in other necks of the woods, potentially with folks like you all around the country as we go forward throughout this year. So thank you all for your support. Thank you, Andy. Thank you, Joel, for your time. And we'll see you all next time. Thank you. Bye-bye.